So certainly from the peaks of 2021, the pace is lower. And it goes in cycles. Like this is the way it is in venture generally. So I think that, yes, you're right. There is not as much of the exuberance as we've had in some of the kind of crazy bull markets like 2021. There's a lot of excitement around the intersection between crypto and AI. There are certain ideas that make sense, some ideas that maybe would take longer to really work because the technology isn't quite there. But that's where I think we're seeing most of the activity at the moment.
This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by Ali Yahya, general partner at a16z's Crypto. Very excited for this one. Ali, thanks for joining me live in the studio at Permissionless.
It's great to be here. Thank you, Jack.
Absolutely. It's good to have you. I think the place I just want to start, Ali, this is the first time we've met, and I don't think you've done a whole ton of the podcast circuit, just from my cursory search ahead of time. And so you haven't a million times over told your story of getting into crypto and so forth, but I think it's just interesting with a16z being such a important firm for the crypto industry and very foundational investors in a lot of the big protocols and blockchains today. So I'm just going to start with the boring basic question, but how did you get into crypto and investing at a16z?
Well, so I'm originally from Mexico. I was born and raised in Mexico City. And I think like the first exposure that I had to kind of the disadvantages or weaknesses of big centralized organizations was the peso devaluation in the early 90s, which was this big moment for every millennial who was born and raised in Mexico, where like the peso basically was reverse split 1,000x. To kind of basically redenominate the currency. And I think that obviously at the time I was very young. I was like 6 years old or 5 years old, and I didn't really grasp the implications. But I do think that kind of exposure eventually set the groundwork for me to have an affinity for crypto later on. I always wanted to be an engineer. I wanted to sort of build technology. I was very into computers and robotics and AI and sort of building things when I was a kid. And I knew that I wanted to come to the US to kind of double down on that because it felt like the US was the frontier in the world of tech. So eventually went to Stanford, studied computer science, was very focused on systems, in particular distributed systems. I really enjoyed programming, which is why those classes really spoke to me. And computer security was a big part of that as well. So actually in 2010, I was doing research as part of the Stanford Computer Security Lab. And all of us at the time, we were all in this one small room. We all got exposed to the Bitcoin white paper at the same time. It kind of came out and we all read it. We were discussing it. We all thought that it was just a toy. We didn't really take it seriously or didn't think that, even though we thought it was fascinating, we had no idea or no conception of how important it was going to be. So even though I mined it, like I set up like a miner on the Stanford Computer Cluster and was pretty into it and was talking about it a lot, I didn't keep track of any of the private keys. So anything I mined kind of is completely lost to the wind.
Tough.
Which became my first very visceral experience with the space. Like later on, kind of reminiscing about that, it's interesting. That was my first exposure. And even I think after like in 2013, maybe I started to grasp some of the implications. I was hanging out with a friend in our living room. We were roommates, and both of us had discovered it 3 years earlier in 2013, or like in 2010, and this was 2013. And we were lamenting the fact that it was 2010 and we didn't capture the opportunity then. And now it's 2013 and the price is $100.
Yeah.
And it's like, that's surely too expensive. We totally fucking missed it. So that was like mistake number 2 in 2013, not capturing the opportunity then. But anyway, I kind of followed the space for quite a while. It was I feel like there is many ways to get into crypto. Many different people get into it for different reasons or from different angles. Some people get into it from the kind of the political side, where they think of it as a cypherpunk libertarian technology. Other people get into it from a kind of tech standpoint, which was more my angle. Like I got into it because of the distributed systems piece, consensus, like all of the technology behind the space, which was so fascinating. Other people maybe get in from more the app layer. And for example, like during the NFT wave, I feel like there was a lot of creative energy that will hopefully come back to the space. And lots of people got into the space that way. So my path was very much the kind of the technical path in 2014 with Ethereum. That was just like such a fascinating development. And it really kind of made it click that blockchains are computers. And that was kind of like a big shift in how I think people thought about blockchains.
Did you buy Ethereum at the time?
I did. I finally got it. I finally bought Ethereum. So, and I bought Bitcoin, and I eventually got it. So it was good in the end. I worked at Google for some time, so I had this big detour. Even though I was following crypto nights and weekends, I worked at Google X on a robotics project. So robotics was my other kind of really big interest. So I spent a lot of time thinking about AI and about robotics. And I actually was really into crypto, so I was trying to get Google X to do a crypto thing. But Google would never do anything crypto related, especially back then, and it wouldn't touch it with a 1,000-foot pole. So that just never happened. And in 2017... I got connected to the firm. I got connected to Chris Dixon at the firm. And his pitch to me was like, you should leave Google. You should join the firm and we should start a crypto fund. And this was before the firm had a formal like crypto vertical. And Chris had been investing in crypto for some time since like early 2010s. He did the Coinbase investment along with many other investments from the main fund, from like the kind of the a16z. Back then there was no vertical separation. And so I did, and so then the rest, like I joined in 2017, and then we've kind of worked towards building the crypto vertical at the firm, and it's been a fun ride.
Okay, that's an interesting overview. It's a cool tidbit that you were trying to get Google back in the day to kind of do something crypto wise. It's an interesting alternative history, maybe if you stuck that out and what that could have turned into.
Yeah.
But, I want to ask then. So you've been at a16z crypto since the beginning. It sounds like. How has your thesis in investing in crypto shifted over time? There's a lot of pretty notable companies in the a16z portfolio: Coinbase, OpenSea, Ethereum, Solana, I think. But the landscape for venture today looks a lot different, and many would say a lot harder than it has in the past for crypto. So how do you think today, maybe compared to how you were in 2017, about being a crypto VC?
Yeah, that's a great question. Yeah, I think that the overall thesis has remained fairly stable. Like the initial thesis came from that insight that blockchain is a computer, and it's a kind of computer that has different properties than any other kind of computing paradigm has had before. The main thing that it introduces is this inversion of the power relationship between software and hardware, where traditionally a computer, the hardware has power over software because whomever controls the hardware can turn the software off or can change it. Whereas in crypto is the inverse of that, where the software has power over hardware because the software forms a network that keeps the hardware in check. Hardware becomes more of a commodity. The miners or validators contribute their computing power, but they have very little control over what the software actually does on top. And that's a very unique shift in software and in computing that is truly unprecedented. And so the question that we were asking ourselves was, what can you do with this new kind of computer? It's a kind of computer that Chris likes to say, it's a computer that can make commitments, and you can actually trust those commitments because the computer has logic that's self-enforcing and that is free of interference from any outside actor, whether it be just any person out there or whether it be even the people who originally built the system. So this new property of being able to build software that makes commitments, what is that good for? Naturally, I think the first immediate application was financial in nature, and like the first application is Bitcoin. The commitment that Bitcoin makes is that there's only ever 21 million Bitcoins. And there's other commitments that it makes around how it can be transferred. But I think the question we had was, what else can you do with it? And I think pretty quickly you start to see it's not just like the Bitcoin application. You can start to build more sophisticated financial primitives, and that's DeFi. And then I think even beyond the financial applications, there's interesting things you can do that are entirely non-financial that still maybe depend on this kind of software that can make commitments idea. Like, for example, and this hasn't happened yet, but I mean, we strongly believe it will. You can build something like a decentralized social network that enshrines the social graph on chain in such a way that you as a user don't have to trust that the centralized monolithic $44 billion tech giant won't censor you or won't take away your ability to post or to follow people or to have people follow you, because those rules are enforced and controlled by a blockchain that no company controls. So there's a whole set of interesting applications that I think leverage this property that we've only really begun to explore. So that was the thesis at the start. That thesis, I think, has continued. I think like that is still the kind of the overriding thesis behind our investing. But I think our strategy has shifted over time, depending on like the landscape and depending on kind of certain macro factors. So I'll give you an example. Previously, during the Biden administration, it felt like DeFi was going to have a very hard time to get adoption because essentially crypto was illegal. And all of the financial things were the most regulated. And so for those to become legal, it would be the hardest. Those would have like the strongest headwinds when trying to get adoption, just because of the kind of the regulatory landscape with Gensler and so on. So we believed back then that the more likely applications to gain traction initially would be the ones that are non-financial, like the things like social networks or games that incorporate crypto, things that are not so in the crosshairs of the kind of the regulatory apparatus. And that was kind of our thesis back then, or our strategy for investing. That we kind of our sense was that those things would work first. But now I think, given that the regulatory landscape has shifted as much as it has, and there's more clarity, and we're optimistic there will be legislation soon. Our sense now is that actually the financial applications are the ones that are more likely to work first. And that's because those are the ones that are closest to product market fit. Things like stablecoins, other kind of financial primitives that you can leverage chain for. Whereas the kind of the consumer Web3 applications, those are not as close to product market fit, and they're harder to get right because you have to build a consumer product that's very polished, that has like all of the UX polish that a Web2 application has. So I think it'll take longer for those to, I think it'll still happen, but it'll take longer for those to come to life.
Interesting. That feels like a notable shift, because I think a lot of the cool ideas maybe in a prior cycle were things like decentralized social or Instagram for NFTs or something like this.
Yeah.
And if you look at the past year or two, the best venture bets have probably been something like Pump Fun or Hyperliquid, which are both very financialized applications inherently. You only go on them to like spend money and many cases lose money. I mean, do you think that those non-financial use cases need to exist, or should crypto just lean into being a financial sector, and things like a Farcaster or something is like less emphasized in that paradigm?
Yeah, and I think it's less a question of whether it should exist and more a question of whether people will just draw that out from the technology as time goes on. Like I think to draw a parallel to his history, like sort of traditional computing, it would have been very hard to imagine all the things that people would do with computers or with the internet. Like the initial purpose of the internet was to create a network for communication in the case of nuclear war. And it was very much a government-driven type of initiative. Who would have thought that we would use the internet for Facebook and Instagram and Uber and all these other kinds of applications that I think at the time people had hardly conceived of. So same thing here. Like I think that maybe the most natural use case initially for crypto is the financial use cases, and we can lean into that hard. And if that's the only thing that ever works, that's already enormous. But I also think that there is a whole lot of white space, and the design space is huge. And there will be founders who maybe don't have that inclination, the financial inclination, and want to build other things. And because computers are just, the design space is infinite essentially, because you can write with a Turing complete programming language, you can build anything. I feel like there will be smart people out there who have creative ideas that we can't even foresee. And claiming now that those won't happen is like the burden of proof is on whomever makes that claim, because normally, in order to be able to be confident about that assertion, you'd have to be confident that no smart people out there is going to come up with an idea that's non-financial that really leverages a blockchain in a great way and finds product market fit. And it's very hard to make that claim.
Mm-hmm. Thanks to Katana for sponsoring this episode. Looking for the next big chain? Katana isn't yet another new general purpose blockchain. It's purpose-built for DeFi users and focused on giving the best experience possible. It does this by sustainably generating deep liquidity and high yield. If your assets are sitting idle, they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over and Katana does the rest of the work for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners, including Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of CAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for some lucky depositors. Thanks again to Katana. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. I don't have data to back this up, but a sense that I get is that the velocity of a16z crypto deals has slowed down in recent years compared to 21, 22. Would you say that's the case?
2021 was a crazy time. So certainly from the peaks of 2021, the pace is lower. And it goes in cycles. Like this is the way it is in venture generally. Usually there's never just like a constant, consistent pace for investing because it depends on all these other kind of external factors and the macro situation and the rate at which new founders are coming into the space. So yes, I think our pace is slower than back then, but it's like somewhere in the middle. Like it's not like at the very depths of like the deep winters that we've gone through. It's more kind of somewhere in the middle.
Gotcha. Do you find it harder then to like find things that excite you to invest in? I think just talking to crypto VCs or VCs who do crypto stuff, it feels like compared to maybe the prior cycle, the exuberance just isn't there, and the excitement about like what should I deploy this LP capital to is not there as much, and it feels like there aren't great bets to be had quite as much. We have the blockchains, we have a lot of the foundational protocols. So has that been your experience? It's
a bit more of a sober time. So I think that, yes, you're right. There is not as much of the exuberance as we've had in some of the kind of crazy bull markets like 2021. But I think the way I would characterize the time now is like we had like a deep winter that was kind of precipitated by the FTX collapse. And then I think we've kind of recovered from there. Like it's felt like to some extent it's normalized since that kind of unwarranted low. Like it kind of affected the space more than it should have, given that FTX wasn't even a protocol. It's like the centralized company imploding. Mm-hmm. And so ironically, like that's the kind of thing that crypto is supposed to help with. And the fact that FTX was perceived as a failure of crypto is this kind of deep irony. So I'd say like we're kind of somewhere in the middle. There's no exuberance. There's more of it feels like more like a sober time. The kinds of things that are really exciting tend to do with, at the moment, they tend to do with all of the stablecoin adoption that we have been seeing. There's a lot of excitement around the intersection between crypto and AI. And these are like deep kind of areas where like there are certain ideas that make sense, some ideas that maybe would take longer to really work because the technology isn't quite there. But that's where I think we're seeing most of the activity at the moment.
And then what about just like stage? Because I think something I've heard offhandedly too is there's maybe a consolidation around, you have a few tier one funds, the a16z, Pantera, Dragonfly, some of those that will do these like huge Series A rounds and stuff. And then you have other VCs who will do very early stage and like in very specific sectors. And maybe a lot of the middle is getting pushed out just as it gets more competitive in venture. Do you foresee like, you know, I've seen a couple things on the timeline recently of you bought back or you bought some layer 0 tokens, you bought some eigen tokens. Like, is it going to shift to working with these teams going into later stages and raising and focusing less on very early stage and just kind of going into that realm more?
Yeah, but the way that we tend to be fairly agnostic about the stage that we participate in, and we try to think of every opportunity just from its core fundamentals. So if we meet an early stage team and it's an incredible team and they have a great idea or it's a great opportunity and we feel like the valuation is reasonable, then by all means we will do it. Same thing if we feel like the public like crypto market is unfairly treating a company that is for whatever reason trading below the kind of the price that we think it should be trading, then same thing, we will kind of lean into that and then build up a position through either like, which usually will partner with a founder and we'll buy tokens either from the foundation or strike some kind of arrangement for us to get exposure. So that's kind of our approach. Like we tend, because we are a multi-stage fund and we can invest at any stage, from like the very, very early stage, including first money in, all the way to like very late stage, like $100 million type of checks. That being said, I do think there are cycles, and there are times when like the private market gets out of sync with the public market, where the public tokens will tend to be more attractive from a valuation standpoint than all of the private deals that are being done. And then that's maybe a time to lean into buying tokens. And then there are other times when it's the reverse, where like it gets kind of heated on the public side, and for whatever reason, the private markets are still at a more reasonable valuation. So it always kind of comes down to like, this is a one specific opportunity, case by case basis. What do we think is the true opportunity and the upside potential, and what's the valuation? And then we make a decision based on that.
One other piece, and then I want to ask what you think about Solana. But I think a refrain you'll hear sometimes is that, you know, it's to be right on the wrong time frame is still to be wrong in investing, basically.
Yeah.
And you've seen this many times in crypto, where someone will have a good idea, but it's just too early, or people invest on like incorrect time horizons. So being very long term, is there any sense to you where it's like, if you did have shorter term horizons or something, like you'd be right more often, or is that like a difficulty in investing that way?
In my view, it's actually easier. And I think this again depends on who you are and what are the things that you are good at. I think that kind of the DNA of the firm makes it so that for us, it's easier to bet on the very long term, because the short term dynamics are actually very hard to predict. Like that, like the macro situation, whether there's like a political thing that's going on, or for whatever reason, like interest rates, or all these kind of things that influence prices and influence returns in the very short term. Those are things that are kind of very fundamentally unpredictable, and only like a very small handful of people, like maybe like these massive macro hedge funds, can have any real alpha in trying to kind of trade on those things. Whereas I think that the longer term, like if again you have like a strong connection to a founder and you believe in them and they're building something that is truly valuable and will be valuable in the long term, as long as they can weather all those cycles in the long term, I think you can say with greater confidence, this will be big. Mm-hmm. And it's very, very powerful to be able to be around and to survive for the long term, to kind of be set up so that you can weather the cycles. So we optimize for that a lot. It's like we want to have a fund structure that's set up for the long term, so that regardless of what happens in the meantime, we can kind of live to the point at which this actually begins to work, and then we're still around and we still have exposure and we finally get to capture the upside. So no.
Does that mean did you do OpenSea?
No, that was not me, but yeah, okay. we did do OpenSea.
But like, does that mean you would do fewer things like that down the line? Because I just think that the way a lot of people conceptualize things like OpenSea and today Pump Fund is maybe these things have like a shelf life, basically, of the really exciting cutting edge speculative game. And once those people who want to speculate with crypto have moved on, they might not come back. So are you less interested in those kind of investments today?
I mean, I think that I would say that OpenSea, there's like a true thesis behind that investment and behind NFTs as a whole, and that they are not just items for speculation, but they're also just objects that are virtual that you can own. That actually, I believe will be a big part of the story of the space. Maybe not now, but I think eventually, because I think like the most straightforward application I can think of is gaming, where you would want to be able to own the in-game items that maybe you buy as part of your gameplay inside of a game. And maybe you want to own your character, and you want to own like the sword or whatever the objects that you accrue as you play. And I think also that opens up the possibility, if you actually own those things and those are on a blockchain and there's a standard for how those items are interpreted, there's an opportunity for then those items to actually be supported cross-game, where you can now take that sword that you got as a part of like your gameplay inside of, say, Fortnite, and then take it into a different game and be able to make it part of your core online identity, as opposed to it being part of like that silo, the one game in which you got it. Mm-hmm. So that creates like this whole opportunity for a broader commercial ecosystem that I think will be real. I mean, Fortnite by itself has this in-game economy where it controls everything. You don't own anything directly because it's all a centralized company, and it does like the company does billions of dollars run rate revenue. So like people certainly want to be able to buy things like that, like cosmetic things that make the gameplay more fun. And I think if those were NFTs that you actually got to own and trade on, like you can maybe speculate about the value for a particular kind of in-game item. Speculation is not inherently bad. Then I think that can become like a much bigger phenomenon. And I don't think that has a short shelf life. I just think that, to your point about timing, they were too early, right? I think that that'll happen, but you kind of have to be around for 10 years until, well, 10 years since then, right? Until I think like hopefully it'll all come back. Like those applications for blockchains will come back.
Speaking of which, why do you think that crypto gaming has not really materialized in a big way? Because I think that what you brought up about being able to trade in-game items in like a more seamless way makes sense to me. There's people doing very crypto-y kind of things on, games like CSGO with gambling with their skins or whatever.
Yeah.
And it just feels like crypto games, to my, like, in my view, haven't really materialized. And there's, like, as a journalist, there's just not a lot to write about in that sector right now. So
yeah.
What's your view on why that, very hyped kind of sector hasn't panned out?
Yeah, and I think it's back to this point we've been making. I think it's just too early, and there are other forces. I think the fact that there's like many, it's kind of overdetermined in some ways. I think the fact that for 4 years crypto was basically illegal and had this like strong stigma around it, and to some extent it still has it, and we have to kind of overcome it. It made it very, very hard for say, for example, AAA game studios to take crypto seriously, right? Or for people who are playing games to want to see crypto as part of the game. Like there was like a strong ick factor where if any of the kind of the Web2 traditional applications, including games, included a crypto component or included NFTs or something like it, then users would recoil in disgust because for whatever reason, I think in part because of like the narrative created by the regulatory environment, the collapse of FTX, the brand of crypto hasn't been good. Mm-hmm. So that's a huge headwind. I think also the fact that the infrastructure hasn't quite been there. Like it was, I mean, for the longest time, it's just been extremely expensive to do any kind of transaction on chain. It's only recently that we now have like 1 cent, 1 second transactions, right? Like I think Solana base, thanks to the infrastructure, those things now actually become a little bit more possible. So I think that it's just too early. I feel like what will happen is stablecoins maybe become the and this is all, I mean, I don't know for sure, but like I think it's possible that stablecoins become the first killer app for the space, where we finally reach hundreds of millions of people. We reach 1 billion people, and they're all using stablecoins in some meaningful way. We can point at that. That's a legitimate use case for the space. And it's undeniable. And then that helps legitimize the rest. And then you get like financial institutions, traditional financial institutions and fintech companies integrating stablecoins in a meaningful way. Hopefully, again, a large number of people have crypto in their wallets. It no longer has that kind of brand headwind. Then at that point, I think it becomes possible, right, for some of these other more futuristic ideas to come to life.
You did a podcast recently or an interview or something with Toli.
Yeah.
And I kind of enjoyed, you kind of started the episode by reading the memo you sent of why you passed on Solana.
Right.
But it looks like you still did later come in. Andreessen did invest.
Yes, exactly. Yeah, we did.
So I guess I'm just curious, like how your view of Solana has shifted over time. What's been your experience of the very like turbulent wild ride of that ecosystem? And what do you make of where Solana is today?
Yeah, well, I mean, for us, again, it all comes down to the people. Like that's the most important thing when thinking about investments, when thinking about the work that we do. And so it's been incredible to just have like met Toli early on before he started Solana. Of course, yeah, we made the big mistake. I made the big mistake of not investing then, but then continued to stay in touch with him, and then eventually did participate in a big way. So now we're big. We have like a big Solana position and big supporters of the ecosystem. And it's been incredible to see kind of the arc of Solana as a community, as a project, also like Toli's growth as a founder and as a leader. And it's just been very impressive. It's been great, especially because it's just so easy in the space to get distracted by the money, right? By the speculation, by the fact that it's easy to make it really big before you really make it big, like to win without winning, and get very rich and then kind of check out. And that happens so much in this space, and it's a bit of a tragedy. Other spaces don't have that as much, like other sectors, where you actually have to build a thing that actually finally works before you get to cash out. Crypto, that's not always the case.
Yeah.
So it's been incredible to see the commitment, especially through the very lows, like that moment after the FTX collapse when Solana went all the way down to, like, people assumed it was dead. And it's amazing to see that through all of that, like Totally, but also the whole community have like stayed strong. So I think, Solana today is in a very strong position, undeniably. I think both from a technology standpoint, they've been driving all sorts of improvements. We've been working with them, with the kind of the broader community and team on a lot of the research to improve some of the core pieces of Solana. Yeah, like I think it has really stood the test of time to some extent, and the fact that it has scaled to the extent that it has is incredible. And it finally does get us there to that promised land of 1 penny, 1 second transactions, which I think is that kind of the holy grail, because that unlocks a lot of possibilities. From a community standpoint, I think also they're as strong as ever, and we just see the community grow every passing month. And one of the ways that we tend to gauge this is by the number of people that pitch us, and which ecosystem they're building on. And so it's interesting to see that Solana comes up more and more, and it's just encouraging. So yeah, I mean, I think Solana's in a great position. Excited to see where we go from here.
You've spoken a bit about, like, you try to be very long term. So what's the long term view for Solana for you at the moment? Like, what does all this become over time?
Yeah, I mean, our view has always been that there are strong network effects for layer 1 blockchains, and so there's likely be a handful of winners, like big kind of smart contract platforms, layer 1 blockchains that end up driving most of the blockchain activity. And so I think Solana is very much a contender, right, for being one of those. And I think it'll be really interesting to see some of the applications that we've been talking about be built on Solana. And that's, I think, what's important is to continue to empower the people building on top of infrastructure like Solana to build those applications that eventually will drive real use cases. So yeah, I think I see Solana as potentially a very important infrastructural primitive in the long term of what crypto becomes.
Thanks to Katana for sponsoring this episode. Looking for the next big chain? Katana isn't yet another new general purpose blockchain. It's purpose-built for DeFi users and focused on giving the best experience possible. It does this by sustainably generating deep liquidity and high yield. If your assets are sitting idle, they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over, and Katana does the rest of the work for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners, including Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of CAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for some lucky depositors. Thanks again to Katana. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Interesting. Is there, you've mentioned stablecoins a few times as one of the things you're really excited about, and I think Solana has the speed and low fees for things like payments with stablecoins. Like, is there a world where that real breakthrough app that you're referencing has to do with Solana and stablecoins?
Yeah, I mean, that's very possible. I think that one of the things I think the Solana community should do is really lean in hard on winning stablecoin adoption, because that'll be very important. And I think right now, some of the infrastructure that's being used is not ideal, in part because it's not decentralized. And we strongly believe that decentralization is important in order for crypto to really live up to its promise. So to whatever extent people build stablecoin products, services, solutions on top of Solana, I think that's a great thing. And I think Solana has the necessary performance and properties to really enable that. And it's exciting to see companies like Stripe, for example, do things on Solana. And I think hopefully we'll see more of that.
Do you have like concrete thoughts on what that looks like though? Because I think Solana stablecoin growth is in this weird place where the majority of the supply is Circle. Circle has this partnership with Coinbase, which obviously wants to promote Base, or it has a business interest to promote Base.
Yeah.
And so it's not like from Solana's perspective, it's not necessarily ideal that most of your supply is Circle, but also it is a centralized issuer, but that is kind of favored under the new Genius Act and regulatory regime in the US. Tether is maybe not like a great option either for you if you're Solana. So does there have to be some kind of new breakout stablecoin issuer for Solana? Like, what does it concretely look like for you for Solana to win stablecoins?
Yeah. Well, I think one optimistic take is that if we get stablecoin legislation, then that will create a kind of standard for what it means to be a stablecoin issuer, which I think will make it much, much easier for all sorts of players to become stablecoin issuers, and we don't end up with just Tether, USDC, whatever else, like the kind of the small handful of stablecoin issuers that we have now. And if that happens, I think what is also likely is that the standardization of what it means to be an issuer makes it more of a commodity business. Because now many more people can become one, so there's more competition. And in order to compete, you kind of have to maybe share some of the profits that come from the yield that you get from all of the capital backing the stablecoin. You have to share that with the ecosystem in order to be competitive. And if that's the case, then like profit margins on becoming an issuer become smaller. That becomes more of a commodity. If there's a likely world in which we do just have lots of issuers, every bank might become an issuer. Many fintech companies might become issuers. Asset managers like BlackRock, et cetera, might become issuers. And I think the goal, like the objective here, is make that happen on Solana. If you want Solana to win, you kind of have to be in that game and in those conversations. And that's not guaranteed, right? Like it could happen elsewhere, but I don't think that the game's over. I don't think that just because Coinbase controls USDC and Tether is like its own thing and it's not currently on Solana, that doesn't mean that the game is lost.
Yeah, you mentioned that like you think a number of smart contract blockchains will all kind of win together. That it's not like a zero sum for you in the future. Are stablecoins that way? Like if a lot of the financial services and the banking sector in the US moves onto stablecoin rails in one way or another, is that going to have to be either on Solana or Base, or can it be on different blockchains?
It's a great question. I think there's lots of uncertainty. Like it's hard to have like a very strong view. I think that back to my earlier point, I think that the base chains have network effects at every level, right? They have network effects at the security level, in that it's like once you become the most secure blockchain, that drives value, and the value that drives encourages more people to participate at the security layer, therefore making it more secure. And so you have this kind of self-reinforcing flywheel. That's a network effect at that layer. There's also a network effect at the kind of developer layer, because once people write their smart contracts for the SVM and they write them in Rust, and it's like kind of tailor built for Solana, it's very hard for them to migrate. And then once they do that too, they themselves become a building block that other developers can use. So they're driving value to that ecosystem to the next marginal developer. It's another kind of a network effect. The same thing happens at the application layer, because integrations, like once you kind of are integrated with Solana, it's easier to integrate the next thing on Solana. And then also there's just like a canonical, like traditional network, like the fact if your friends are on Solana, you're going to want to be on Solana because it's going to be easier to interact with them.
Yeah.
So all of those are strong network effects that I think leads to a winner take most, if not winner take all type of dynamic for base layers, for layer one blockchains. And I think that probably extends to stablecoins. Stablecoins probably won't be the exception. Stablecoins run on base layers. And so then whichever base layer wins will probably also win a lot of the stablecoin activity.
Another piece I wanted to ask about is an a16z bet. When we talk about like moonshot apps that could take off, that I don't think has really permeated through my corner of crypto Twitter as much, which is Worldcoin, or World, I guess they're calling it now. But I thought that was a really interesting investment and something that maybe because the team is not as active in like the crypto native world, I don't think they're at this conference, stuff like that. It doesn't get talked about as much in my circles, but I remember I was at Solana Accelerate and I was talking to someone about like people really like are sleeping on Worldcoin. Like it has this Sam Altman backing. Like there's a interesting use case there with AI humanness proof. And as this conversation is happening, I get like a Telegram news ping that's like a16z invests 300 million, or I forget how much of the token you bought. But now that I have you in person, I want to ask, like, what is the Worldcoin thesis, and how do you think about that investment?
Yeah, of course. And by the way, we invested earlier. This was
Yes,
more.
Yeah.
I think that like one big trend is that crypto and AI are kind of counterweights for one another in many ways. So one of the trends that is inevitable is the fact that AI will create this infinite amount of media, a lot of which might seem like it is of humans or derived from humans, and it's going to be very, very hard on the other side through the internet to be able to tell whether you're interacting with a human or not. And so the whole kind of thesis behind Worldcoin is that proof of humanity and in the era of AI becomes ever more important. But you don't want to rely on like KYC and like your government ID for many reasons. One of which is that then you just have to rely on one big centralized party. And also, I think more importantly, it's not really global and not fully inclusive of everyone in the world. So instead, you want more of a crypto native, more internet native, sort of much more modern way of proving your humanity on the internet. So that's basically what Worldcoin is. Worldcoin built a technology that allows you to prove that you are human in such a way that is privacy preserving. None of your biometric data. So if people don't know, Worldcoin has built this orb that has biometric sensors to read your iris and a number of other features of your face to confirm that you are human, and then issue you a proof or an attestation that you are human that you can then carry on your phone, and you can use that attestation to prove to other people, like services you interact with, that you're human. So for example, if you go on Tinder or some dating app and you want to prove that you are human, if Tinder were to have a world integration, which they might, then that's very easy. You can very easily, you can have like a little check mark on your Tinder profile or your dating app profile or whatever social network profile that is an attestation that you're human. And you get that because the orb created that proof. And the orb does this in a privacy preserving way where none of your biometric information leaves the orb. And it uses zero knowledge proofs. It's like there's like a lot of technical depth that went into building the orb to make it so that you can do this without having your biometric data either controlled by World, the company, or like leaked out there into the world. So I feel like that's going to be crucial. Like I think on the internet, nobody knows you're a dog, the old 90s saying. On the internet, nobody knows you're a bot. That's very real today. AIs have passed the Turing test. It's very hard to know whether you're interacting with an AI or a human. So this will become an essential counterweight to kind of that whole trend.
And this came on my radar because it was like, wow, Sam Altman has a crypto thing. And my understanding is the crypto of it all, the WLD token, is really just to like bootstrap it, because you go to some of these countries around the world and $50, $100 might mean a lot to people. And so they're kind of willing to get their irises scanned, which in the media has been a controversial point. But one way or another is do you see that being the extent to which the token is useful, or down the line, is there other utility for World besides just like bootstrapping lots of users onto this thing?
Well, I mean, the whole idea is to bootstrap a whole ecosystem. Mm-hmm. And to drive a lot of value in that ecosystem. So there's also World Chain. So there's a chain that the token's associated with that is kind of the beginning of that ecosystem. And yes, a token is used to help bootstrap the network by rewarding people who want to be a part of it. So if you want to get onboarded onto World, you can get your irises scanned, and then you get free World in exchange for that. So that it's kind of like the old PayPal strategy where in order to get new users, PayPal would give people $20 so you sign up. So that's one role of the token, but again, it's a chain, so the token has all these other roles. And I think the chain itself might also drive other interesting applications. Like now that everyone's on this chain, World users can now pay one another, right? And World users can now interact with applications that people build on top of World Chain. So for example, another one of our portfolio companies called Morpho built a lending platform on Ethereum originally, but they also just launched the same protocol on World Chain. So now all of the users of World can now borrow and lend either their World, which they got from them scanning their irises or whatever else. It's also a wallet. They can have USDC, they can have any other crypto assets, and they can now participate in this lending protocol through the integration between Morpho and World. So this becomes an ecosystem. I think the vision is that this can become huge because it's an ecosystem where everyone is guaranteed to be human.
Mm-hmm. Interesting. That's a good pitch. We've talked about a couple apps. I think there's a divide in the way people talk about crypto venture, where I think people got really tired of VCs backing infra because it felt like there was tons of crypto infra bets being made, but not as many bets on apps. And so it was like, why do we need 6 different settlement layers for like no users or whatever? I'm just curious how you think about that today. Like, is the era of investing in crypto infrastructure over? Is there still lots of infrastructure to invest in? I think a lot of infra investments have ended up being more lucrative for VCs than apps have, just based on returns we've seen so far. But I don't know. How do you think about the kind of apps versus infra divide?
Yeah, I mean, I think this is the kind of thing, especially in computing, that goes in cycles, where there will be like a long infrastructure era, especially at the beginning, because you can't build apps unless you have infrastructure. And that's the thing that's dominant, because that's the only thing you really can do. But then at some point, like the infrastructure gets good enough, and then maybe there's like more of a question as to how should you continue to improve the infrastructure. It's maybe uncertain, and it's kind of maybe met some of its requirements, at least the initial set of requirements that you set out to meet. And then at that point, maybe it becomes possible to build applications that begin to work. But then as those applications start to scale, they begin to stress the infrastructure in ways that are sometimes unpredictable, right? And so then it's like once that begins to happen, say that we get like massive adoption of stablecoins, we're going to learn a lot about the ways in which the current infrastructure is actually deficient, because it's not as if we've actually solved all the problems. And then when that happens, it'll become easier for there to be another era, another wave of infrastructure projects that emerge to solve those issues. And so it kind of goes in cycles. It's very hard to know, obviously, like where on the cycle you are. And it's again, I think our investing tends to be very case by case. We want to see, like, we primarily look for great people that we back, as opposed to kind of dictating top down. We are in an infrastructure cycle, so we're just doing infrastructure, or we're in an app cycle, therefore we'll only do apps. But that, I think, is like a rough mental model, and I think that has been true for previous waves of computing, like the personal computer or like mobile. I think that, or even the internet. I think we've seen kind of this back and forth between the two components.
Just based on deals you're seeing, then, do you think that there's more infra being built out or more apps being built out at the current moment?
At the current moment, it feels it's maybe slightly skewed towards infra, but I think it's fairly balanced at the moment. It is kind of like this middle ground type of times, where it doesn't feel extreme in any sense, right? It's
yeah,
and maybe in the same way the price doesn't feel like it's
yeah. And maybe maybe we've been in infra times for a while, and we're shifting to apps. Would be how I would think about it.
I think that's possible. I do think that this whole stablecoin thesis, like that would argue for that. Like if now the infrastructure has gotten to a point where you can actually do these things, you can actually do 1 second, 1 penny transactions. Then now, like, the burden is on the app layer. Like, let's build real things and use this in some way. So I'm hopeful that that's the case, that we got the infrastructure good enough, and now that can happen.
Ali, we are at time. It's been very fun talking to you. Wish we could go on for longer, but we'll have to have you back on Lightspeed again to see how a lot of these threads we're talking about play out. Thank you so much for taking the time to chat with me today.
Yeah, thank you for having me. It was a lot of fun.
Thank you, everyone, for listening. This has been Ali Yahya, live in Brooklyn from the Permissionless 4 conference. Thank you so much for listening. If you've made it this far, please like, subscribe, 5-star, wherever you get your podcasts. If you enjoyed this episode, please share it with a friend, and we'll see you again very soon.